Hey, what's up, crypto fam? It's me, Domenico. Imagine turning your time into real money and power on a blockchain that's about to explode. If you're not staking ICP right now, you're missing out on $1 billion lockup that's set to reshape the game. Stick around because this could change everything for you, but you need to understand how to play the game right. Look, if you ever watch your crypto position get wrecked by a sudden week or a random flash crash, you're not alone. And it's not just bad luck. The crypto market isn't fully rigged in the cartoon villa sense, but it's heavily skewed towards big players who exploit its Wild West rules. And at the heart of all of this is leveraged trading, which turns volatility in a profit machine for exchanges, whales being the massive holders, such as BlackRock and obviously the politicians, etc., and market makers. It's a system where small price nudges can cascade into billions in liquidations, transferring wealth from retail traders to the house. And as of October 2025, with Bitcoin hovering around 111K, post halving and spot ETFs pulling in institutional money, the market's grown to an over $2 trillion beast. But beneath the hype, manipulation thrives, as we witnessed on Friday, because crypto is still under-regulated compared to stocks or forex. Think of it like this. Regulators like the SEC are cracking down, more on that later, but the gaps let bad actors run wild. And let's break it down step by step with real examples so you can spot the traps and trade and invest smarter. 1. Leverage 101. It's a double-edged sword that fuels the fire. Leverage lets you control a big position with a small deposit, like borrowing $90 to trade $100 worth of crypto at 10x leverage. Sounds great by amplifying the gains, right? But a 5% price jump could double your money. But flip it, the same 5% price wipes you out by liquidation. Basically, a forced sale to cover the loan. But why it's manipulative? Because we've got exchanges like Binance, Bybit, and OKX, which offer insane leverage of up to 100x or more, but they profit directly from your losses. And you could see when the exchanges froze on Friday, people couldn't even enter or exit the market. Every liquidation is a fee bonanza for them. Think of it as a casino rigging the slots, so the house always wins. And in 2025 alone, chain analysts report over 10 billion in leverage liquidations during volatile periods, much of it from engineered dips, like which we witnessed on Friday. Analogy, think of it like this. It's like playing a poker game where the dealer knows your hand and you can accidentally deal you a bad card. Retail traders, you and me, chase the upside, but whales use leverage to hunt the stops. 2. How manipulation actually happens. The playbook's crypto's low barriers, no central authority, pseudonymous wallets, 24/7 trading make it a manipulator's paradise. And here's the dirt backed up by data. Liquidation hunting, which is aka called stop loss sniping. Whales or market makers push prices just far enough to trigger cluster stop losses, creating a sell cascade because they know where all the stops are positioned. So your stop, say, for instance, at 59K, they wick it to 58.99, liquidate billions and buy the dip cheap. So at June 2025, OKX Institute saw a whale dodge a $332 million Bitcoin liquidation after a manipulated short position, sparking a 3% flash crash that nuked 500 million in longs. And people on X were calling this bait and bleed. Institutions build momentum to lure retail, then flip the harvest. They even do it in traditional markets, but at much lower volatility. With the crypto market being high volatility and a lot of leverage, they're able to do it at much more monumental ranges. So wash trading and fake volume. Traders or exchanges, they buy, sell the same asset to inflate volume, luring suckers. And 70% plus on some exchange activity per studies. Binance faced SEC charges in 2023 for using this controlled market makers to fake liquidity. And the result of all this, assets look hot, prices pump artificially and dump when the rug's pulled. And these pump and dumps with leverage. There's groups hyper token on socials, Telegram pumps, leverage up to 50x. spike the price 10x, then dump. And even the FBI's 2024 Operation Token Mirrors busted a $25 million scheme with a fake AI token in DeFi sandwich attacks. On Uniswap, front run your trade with leverage bots stealing the slippage. Well games and coordinated hits. Big plays, example, there was a $380 million 40x short on BTC coordinate across exchanges to suppress prices while accumulating. So it's crazy because even I saw an X, there was a chatter points to tariff wars as cover for dumping into low liquidity hours, liquidating 2 billion in longs. One analyst exposure, Binance shuttling stablecoins to market makers for drawing the charts to max pain. And this is insane because why it persists? Because they have the perfect storm to do it. It's different to traditional markets because crypto has weak regulation. Crypto's global, borderless, US bans retail spot margin, but derivative loopholes allow 100x on offshore platforms. Making in the EU and IOSCO guidelines help, but enforcement lags. And also the exchange incentives, they earn on fees and liquidations. So why stop the gravy train? So, it's live and well. And, and it's going to keep going. And also for the psyops, their narratives, which we witnessed on Friday. Trump's tariffs equals dump. They use the tariff as the excuse to mask the rigging. So this is how they expose all the psyop in the retail market. Because you can see the prices are going up, there's all the positivity, create the FOMO, and they turn you into liquidity, like what happened on Friday. That's why I always say, even that I come from a traditional markets background as a professional trader, I buy ICP at spot prices, not to be the liquidity. Because, I know these things happen quite often. You know what I mean? I'm not going to say I knew it was going to happen on Friday, but I know these situations happen. Think about it. Trump then comes out on Truth 2 hours prior to me making this video. We're talking Sunday evening here in European time, posting saying, don't worry about China. It will be fine. Highly respected President Xi just had a bad moment. He doesn't want a depression for his country, and neither do I. The USA wants to help China, not hurt it. Signed, President Donald J. Trump. And then we can see also those green movements in the market today. So these, what we call yo-yo moves, allows them to accumulate their bags much bigger than they are by using leverage traders as their liquidity. Retailers lose hope, think the market is dead, the bull cycle is dead. Once the adoption actually business cycle kicks off, the masses will actually miss the massive inevitable moves. Because once they're accumulating, and once there's nothing more to accumulate, the price will send. They create these crash to accumulate as much as they can, and once they absorb all the supply, the price is going to go through the roof. So you got to think about it. When the market trades at 100x leverage, with a market at 70% plus volatility, they can easily rig it all day long and profit massively over, say, traditional markets because the leverage and volatility is insanely high. That's why even me as a professional trader only buy ICP at spot prices. Because I'm positioned over the medium and longer term. I'm looking at 3-5 year period, and I know that within that period, there is going to be many flash crashes. This is probably, this is going to happen. Could even happen another once or twice before they actually send it. Because what they do is they're going to absorb it all up. Then eventually it's going to send. Eventually it's going to rocket. But most people are going to miss the opportunity because they're going to get liquidated. Obviously, the stop's getting hunted. Or just the fear that it's bleeding, they just sell. They just won't participate in the market. See? That's why I just buy spot, so I can never be their liquidity. And 4, actionable advice: don't be the prey. And politically incorrect truth: the game's stacked, but you can play defense. That's why whales win, and because they know how to accumulate, not get liquidated. Retail user leverage. They obviously panic when the price crashes, and they make emotional decisions. So that's the worst thing you can do in investing or trading, come from someone with decades of experience in this industry. And that's why my recommendation is not financial advice. If you are a professional trader in the crypto market, stick to 25x max. if you're a professional trader, but trading only short-term swings. Short-term swings with a specific strategy. Obviously, you got to see where you are in, obviously, if liquidity is rising or falling, and obviously see the business conditions, like short-term business conditions. If they're moving to the upside, you just got to position like a sniper and keep the leverage capped. But that's obviously if you're a professional. But for everybody else, buy at spot prices and hodl. And obviously with me being an ICP positioned over the medium longer term, I buy spot. That is it. Like I don't like even me, like I can tell you that I have like over 5 figures ICP. If I wanted to, I could have leveraged that 5x. I could literally the amount of equity that I have in ICP, I could have leveraged that up to have 50,000, 100,000 ICP. But if you get liquidated, then you lose it all. So that's why it's a double-edged sword that you don't want to be the liquidity. And obviously, I can tell you that leveraging the crypto market screws the whole market, and they use it to reset it. So they, hunt the hunters. They use you to add onto their bags, basically. That's why. And if you're a professional trader, you need to that stops away from obvious levels. You're gonna wait for like liquidation clears, look at the heat maps, but there's it's very complex. It's very complex. So that's why once you get the discounts, just buy spot and keep it simple. And that's why I always say buy spot, accumulate during dips. So the fundamentals of ICP hasn't changed. You get these discounts, you accumulate during dips. Simple. Lock it in. That's it, and you're good. Because bottom line, crypto's not rigged against you. You just need to stop gambling. It's a transfer machine. Nothing is lost. It's just transferred from one hand to another. Nothing is lost. It's just transferred from one hand to another. If you got if you exited the market or you exit liquidity, your bags got transferred to the whales. As long as you're not exit liquidity, you know what I mean? You are going to do extremely well in the best performing assets over the many years to come. That's why you need to arm yourself. In the crypto market, if you're a professional trader, trade smart. I gave you my rules of advice. If you're not a professional trader, buy spot and use that as your edge to position yourself over the long term. Because, all right, I can tell you that. Because today, we're going to talk about Internet Computer Protocol and how, not financial advice, every retailer should be using these dips, these discounts to accumulate their position buying spot, because this coin isn't another coin. It's a powerless blockchain that's quietly building the future of decentralized technology. But here's the kicker. With over 40% of its supply locked up tight, securing more than $1 billion in value, ICP is primed for massive growth. And between 2026 and 2028, things are about to get wild because there's well over $1 billion locked. ICP cannot go below that. They can't be forced to sell. They are pretty much absorbing it all up. And they're using these crazy wicks to fear the market. But it ain't going to zero. If you buy spot, you'll be fine. And if you're serious about building wealth in Web3, you need to hear this now. So hit that like button. If you're ready to level up, subscribe so you don't miss the breakdowns on hidden gems like this. Picture this. Back in the early days of crypto, everything was hype and speculation. Pump, dump, repeat. But ICP, it's built differently. It's built by the smartest minds, the smartest cryptographers the world has ever seen. Ex-Google, ex-IBM. This network is like the brain of the internet, running smart contracts at web speed without the bottlenecks of Ethereum or Solana. Let me tell you a quick story. I remember when Bitcoin first hit, people laughed it off as digital gold for nerds. Fast forward, and early holders are millionaires of Bitcoin. ICP is in the same spot right now. Remember, this is all manipulation. Price doesn't dictate the utility and underlying value of ICP. Amazon went from $100 to $6. Based on the price, everyone said Amazon's dead. It's dead. It's going to do nothing. Look at Amazon today. It was just a bleep on the price chart. Because what? It's all manipulation. And even Bezos said, as the metrics internally within the company of Amazon was improving, the price kept dipping. And obviously, he was just there adding on to the bag as, the retail FOMO were getting manipulated. That's what happened is. It's just a transfer of capital. And you don't want to be that liquidity. And I can tell you, as of mid-2025, folks have staked over 230 million tokens. That's nearly half of the total supply. We're talking about 1 million plus tied up in governance, not just in sitting wallets. But why does this matter? Because unlike those fly-by-night projects where whales dump at the first sign of trouble, ICP rewards patience. Over 85% of that staked amount is committed for more than a year. And get this, 60% is locked for the full 8 years. We're not looking at these short-term price manipulations. We don't care because it's like planting a money tree that grows bigger the longer you wait. Because this isn't speculation, it's a strategic commitment from builders, institutions, and everyday holders who see the long-term game. That's key. You cannot be the liquidity to profit from this long-term game. Remember, leverage manipulation of price does not determine the long-term value of price and where it will go. As Warren Buffett has often quoted, our favorite holding period is forever. And that's why you have to position where you're not that exit liquidity to be able to hold forever, basically. And here's where the urgency kicks in. The crypto market is heating up, Post-halving cycles, you've got an AI DeFi boom. We're going to go for an AI productivity boom next year in 2026. The business cycle, while we've got PMIs like slightly below 50. The top is when the PMIs are like 60, 65. We're nowhere near the top. This is just a bleep in the radar. And people think it's dead, it's done. Because if you're not watching this is your window. Because before the unlocks start trickling in, prices will inevitably skyrocket. It's only a matter of time, not financial wise. Okay, let's break this down like I'm explaining to my best friend who's new to crypto. And its core, ICP uses something called the network nervous system. Think of it as a democratic brain of the blockchain. When you stake your ICP, you're not just holding, you're becoming a neuron that votes on upgrades, proposals, and the future of the network. But the genius part, the longer you lock your stake, the more power and rewards you get. It's like leveling up in a video game, for example. Lock for 6 months, you get about a 1.06x boost to your voting power. A 4-year, that jumps to about 1.13x. 2-year lockup, about 1.25x. 4-year, 1.5x. And the max 8 years, you double your influence 2x. Plus rewards compound based on how long your neuron ages and how actively you vote. For those 8-year commitments, you're looking at 15 to 18% annual yields. That's massive. That is more than the debasement of currency, which is around 8% a year, and the average inflation rate at 2-3%. So you're getting a positive yield while you wait for, obviously, the long-term mass adoption and utility of what ICP will be in the future. And that's better than most savings account, way better than any savings account. And it's all decentralized. Now for the advanced crowd, this setup concentrates power with the long-term players, shutting out the short-term flippers. It's economic engineering at its finest, like how Warren Buffett builds wealth through compound interest, but on steroids with blockchain technology. But wait, here's the plot twist. Starting in 26, next year, some of these stake tokens will start unlocking as the delays end. We're estimating 25 to 30 million ICP hitting the market in 26, 30 to 35 million in 27, and 35 to 40 million in 2028. Sounds scary? No. These aren't new tokens inflating the supply. They're just existing ones becoming liquid. Even after that, 70-75% of today's staked ICP, which is around 165 to 175 million tokens, stay locked. That means rock solid security and governance that doesn't flip-flop. Compare this to other chains. Most are riddled with speculators causing wild swings. ICP, it's an anchor in the storm, damping volatility and aligning everyone for the long haul. Real world example, think of it like a company's employee stock options vested over years to keep talent committed. Same vibe here, but for a global network. All right, enough theory. Let's get practical. If you're fired up about it, ICP is here and what you need to do next. First, research the basics. Head to the official ICP site or dashboards to see the real-time staking stats. Don't just take my word. verify. Step 2, if you're ready to stake, start small. Create a Neuron and NS app. It's user-friendly. It's easy to use, even for beginners. Choose your lockup period wisely, and if you're in the long game, go for the AE max to supercharge your rewards. And pro tip, voting consistently boosts your yields, so set reminders, and for advanced moves, look into merging neurons or following top proposals to maximize influence. But why act now? With unlocks looming, early stakers could see a huge upside as demand grows for the technology. It's only inevitable. It is the only technology that solves multi-trillion-dollar solutions. It's inevitable. And imagine being part of the decisions that scale the internet. That's power. But remember, crypto's volatile. We saw it on Friday. The leverage manipulations, we're trading 100x leverage, 70% volatility. These flash crashes happen, and then it's not going to be the last time it's going to happen. So that's why the most important thing is to use them to buy discounts when the market offers it, like it did on Friday, but buying spot, locking it up, earning your yield, and do not be the exit liquidity. This is fundamental. So remember, because over the long term, price doesn't dictate where utility, value, and the technology will grow. It's inevitable. It's only a matter of time. So drop a comment below. What's your staking strategy? And are you going long on ICP? And let's discuss. I read everyone. This is huge, guys, because ICP isn't a hype coin. It's scientifically designed beast ready to dominate the centralized compute for decades to come. For decades to come. For decades. We are early. We are fucking early. And the world just doesn't know it yet. With billions locked and incentives that reward builders over traders, we're looking at stability meets explosive potential. If you miss this, I can assure you, you'll kick yourself in 2028 when portfolios are popping. Because I can pretty much say they have to refinance about 10 trillion next year. And the back half of Trump's presidency, we get on the AI productivity boom and the business cycle is going to pick up. Before Trump's presidency, we're going to see an ISM above 60. Then obviously this will give enough time for caffeines, obviously utility, like the mass adoption utility in caffeine, to obviously accelerate. People think, oh, caffeine's going to come out, the price is going to go for the moon. It's going to take many months, but it's going to coincide with economic and financial conditions that are going to be very, 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 very bullish. And that's why they use these flash crashes to be able to add to their bag. They know that the institutional adoption is going to kick in. They know that it's going to go up to the right. They need it to go up into the right. But before they do it, they want to be able, the whales, the politicians in charge, I'm not going to say names, they want to be able to add to their bag. But you just got to see what they're doing. You know what I mean? Just look at the Trump family, see what they are doing. You know what I mean? His son became a billionaire in Bitcoin. Just see what they're doing. You know what I mean? Like Trump holds around $1 billion Bitcoin himself, or $1 billion in Bitcoin himself. Like, he's got out of the property game. It takes, add two and two together. So this is no accident. They know the industry is going to go up to the right, but you have to stay positioned over the medium, longer term. So that's why you need to turn on notifications so you never miss a beat. Like if this fired you up, and share this with a friend who's still sleeping on crypto and stuck in the Web 2 fraud. You want to be positioned in real world utility that is going to change the game. And comment ICP to the moon if you're staking. And don't wait. Research ICP today. The links are in the description because your future self will thank you. As we wrap up, remember, in crypto, time is your greatest asset. ICP turns that into governance, security, and straight up gains. Stay smart, stay invested, don't be their exit liquidity, and have a vision over the medium and longer term, and your future self will thank you again. And I'll see you in the next one. Peace out for now.